You are, and I'm obviously having a little trouble in terms of what I'm saying today. So let's throw it to you on Ethos Private Equity. You're going to set some context there.
Yes, obviously, Bronwyn, this is a private equity themed show today. So we just wanted to paint the context because Ethos is one of the larger, one of the largest firms in South Africa. And then later we chat to David at Actis. But here's just a look at the South African private equity industry up to 2011. And this information is courtesy of KPMG, the private equity survey they did. You can just see here on the graph, we have about 115.8 billion rand invested through the industry in 2011, and you can see how it's grown quite nicely from 2001. Obviously, private equity, they raise the money first and then go and look for investment opportunities, and it takes a while to close those deals, so you have a little bit of money that sits in undrawn commitments. If we have a look at the next graph, we can just have a look at the type of funding that private equity is involved in. And this is obviously this is third-party funds raised during the year. You can see that a lot of the money that's being raised in our market is for later stage companies or later stage investments, which is where they're adding to positions that they've already taken and also investing in businesses that are well established. If you had to go to Silicon Valley, obviously that green color would be a lot higher because there's a lot of funding of initial stage business models and concepts. Just going to the third slide here, and this just tells you the types of investing that the industry is doing. In the dark red, we've got the new investments, so that would be the first time that the private equity company is getting involved with a business model. And then flowing from that, they often have follow-on investments where they add further capital to businesses that are growing. So that's just a nice sketch of where the industry is at the moment. And Bronwyn, what we want to do is just find out now, with all the money that Ethos have raised, what they're going to do with it. Exactly, and talking
about a lot of money, $800 million into Ethos Fund 6. Take us through how quickly you got that money in a tough economic environment.
Bronwyn, we're very pleased with the outcome that Ethos has achieved. I think this is quite unique. It has been a tough fundraising kind of environment. However, it's a testimony to the Ethos franchise and the track record that we have built over the period of time that we've been around. And also, it's a testimony that investors still find South Africa a very attractive investment destination. And also,
despite all the negative news flow.
Despite a lot of the noise and rhetoric, I think investors go beyond the noise and rhetoric. They are mostly medium to long-term investors, and they still think that there is growth opportunity in South Africa. And more importantly, they view South Africa as the gateway into the rest of the continent.
Ngalo, your activities at Ethos have been very much focused around South Africa. What's the plan going forward? Is the large portion of that 800 million that you've raised going to be used locally, or do you have aspirations to use that and spread that investment a bit more around the continent, in sub-Saharan Africa in particular?
Right. South Africa is still our mainstay. It is our bread and butter, and a significant chunk of our investments are going to be in South Africa. But we have also allocated a portion of the fund, up to 20%, that we can invest on a direct basis into the rest of the continent. We have a few selected countries. Clearly the continent is huge, but we think we need to focus in the larger markets. But more importantly, coming back to South Africa, our key strategy is to support our portfolio investments here in South Africa and expand their operations into the rest of the continent.
What sector bias do you have here in South Africa, if any?
Yes, we do. Our investment strategy is a very sector based philosophy, where we look to invest in sectors that we believe will achieve a superior growth compared to your normal kind of GDP growth rate. And these sectors are not, rocket science. It's quite well known that sectors like retail, sectors like health and education, business services, we think that companies that provide services to the infrastructure area will experience growth, because infrastructure is going to be rolled out not only here in South Africa, but also into the rest of the continent. We don't invest in infrastructure per se, but we support companies that provide services to those kind of sectors.
Ngalo, you've hit the ground running quite quickly. You've already put 2 deals in place. Do you want to just tell our audience and just color what your previous remarks about the type of sectors you like with what you've done already with these two deals?
Right. If you look at the one deal we have done, it's a company called Waco. Waco is a very interesting investment for us because we know it quite well from a previous relationship. It's a company that has three kind of key focus areas. In the first instance, it provides the scaffolding and the shoring into industry. So if you're going to put up a new building, if you're going to put up a new bridge, if you're going to service a petrochemical plant, you more than likely require their services. Secondly, they have a significant chunk of part of their business where they provide modular homes or modular buildings for, let's say, a mining town and so forth. And that also is another growth area. And finally, they have an area where they provide sanitation, and these are mostly the mobile toilets that you would see either in mining kind of towns or even in urban areas where you see people coming in and being provided these sanitation facilities.
You say that obviously your focal area is still South Africa, but with the excitement that I note in your voice when it comes to the consumer story, and that it's no surprise to anybody that everybody's going after the consumer, you've got to be targeting Nigeria.
We are targeting the key markets in sub-Saharan Africa. Clearly, Nigeria and Ghana in the west is a key area. But also in the east, Kenya, Uganda, and Tanzania as a collective is also a significant market, and in some instances, larger than even Nigeria. So we will also target that. And clearly, as I mentioned earlier, the focus is to find South African companies that can benefit from that growth there and provide them the capacity and capability to go ahead and capture that.
What trends are you seeing, sorry Warren to jump in here, when you are providing that capacity for them to grow into Africa, what trends are you seeing for companies expanding? Is it a joint venture based scenario in terms of going into Nigeria or into East Africa? Or do they go and set up greenfields operations?
Right, it's a good question. It's not a one size that fits all. It is bespoke, it's unique to each particular situation. We find, for instances, where we believe that the company will be best served by actually starting up an operations where they open up a branch, then the key issues there is trying to make sure you find the right partner, to find a joint venture partner that can bring something to the table that is additive to the relationship. But in some instances where an agency model would work, where we try to open a rep office or find an agent that will buy the goods and services that are provided by the South African company. And in other instances, we try to find a acquisition that's on the ground that we believe we can buy, control, and make it part of the operation and bring the discipline and processes and procedures that we have here in South Africa into that particular operation.
And Ngala, a lot of the private equity industry, as I understand it, requires the use of debt because you put down an equity portion into a business and you use banks and various financial institutions to raise debt to cover the acquisition if you're doing an acquisition, for example. What's the sort of appetite been with the banks recently, especially regarding the increased capital that they need to hold for Basel III and those things? Are you finding that it's quite easy raising the debt portion of the funding that you're looking for?
Right. Warren, we're very fortunate that our South African banks were not severely affected by the global financial crisis. So in most instances, they're quite open for business and are actually right now quite hungry for business and looking to partner with us into deals. The levels of debt that we look to introduce into our businesses are not significant. So we're looking to maybe one part equity, one part debt. Clearly, the investments we make are investments that have to grow, so we like to leave room in the cash flows in the business to fund the growth. So, it's a really a good time right now for South African banks out there looking for opportunities. I think another interesting phenomena that is happening, which is showing even more the maturity of our capital markets, we're starting to see an area where predominantly before was, South African companies had to go to Europe to access the high yield market. There is a high yield market now starting to evolve in South Africa, where certain institutional investors are looking for that, and we've actually capitalized on that and gone out and raised what you call high yield bonds. into our investments, and they're very attractive from a private equity standpoint because their covenants are friendly to the kind of things we do. So you really just have to kind of maintain rather than kind of have a current pay.
So in essence, essentially, instead of going and getting a bank term loan to fund the debt portion, you can actually go and list. Would you list these debt instruments, or what sort of transfer mechanism do they take into the
You
market?
can have both. They are more attractive if they're listed, and therefore in certain asset categories, certain investors will like if they are listed, or sometimes you can place them privately.
Okay.
Ngala, there's another trend, and we're nearly out of time, but the Government Employees Pension Fund has made it very clear that they're going to put 5% of total assets into private equity in South Africa itself, and obviously a portion allocated to Africa. Are you able to capitalize on that?
I think it's a very, very positive trend for the industry. On our part, we really appreciate the fact that through the change in regulation, there is more, money that is being allocated to private equity, and we've been benefited from that. If you look at our current fund, we have achieved a situation where close to 40% of the funds are from South Africa as opposed to 30% in our prior funds. So we think this is an important trend. Charity begins at home. So we would,
John Oliphant will have to have a little word in his ear, charity beginning at home.
Ngola, just to talk about that investor base, which is quite interesting as well. You said it's become as broad as it's ever been with the sixth fund. I'm interested. We talk about what's happened with Regulation 28 as well, where pension funds now have more money. Have you guys done any work on the sort of allocation that institutional investors in South Africa could have to private equity, and how much they're actually applying or allocating to private equity at this point?
It is quite early in that stage to say that there's been a meaningful jump in the amount that's being allocated. I think the regulation is put in place capacity to do that, and over time that will happen. Back to your question about a diversity of investors, if you look at the investors that we've had in this current fund, you're quite right, we've been able to attract a diversity. Our investor base is made mostly of corporate and public pension funds from the US and locally, high net worth individual endowments. And then an interesting phenomenon that's come through this time around is the interest from sovereign wealth funds, not only from the Middle East, but also from the Far East, which again points to my earlier point that South Africa is becoming, and Africa in general, becoming more attractive for investors from even the East.
Unfortunately, we're out of time, but thanks so much for joining us. Ngala
welcome.
Chufi from Ethos Private Equity.